Porinju Veliyath. He is MD and Portfolio Manager at Equity Intelligence India. He joins us on the show from Kochi. And so much to speak about to him, about individual spaces, about what's happening in the Indian markets and about global flows as well. Great having you, Mr. Veliyath. Thank you so much for joining in. And before I start the interview, let me tell you that we hope to get you more often on this forum. Now let me start off with my set of questions. After the recent run-up that we've seen, do you think the margin of safety for Indian markets as well as probably for some key emerging markets is missing currently?
I don't think so. Of course, the margin of safety or the attractiveness has definitely come down. But we have to see this market move in a different perspective, especially coming to the mid-cap and small-cap companies in India. We had almost 6-7 years of unusual depression, a very prolonged period of time. Once that period is over and it's just started moving. Started moving up means, you might have seen some of these companies gone up by, 3 times, 5 times and 10 times. So, normally it is very, very difficult for people to take a buying decision at those levels. But I don't really feel that the values are exhausted and there is no margin of safety. It's very wrong. After such a prolonged period of depression, some of these companies were very stupidly priced, in my opinion, in 2011, 12, and most part of 13. I could see companies quoting at 1 year cash flow, a lot of them. And they are not really penny companies, but the stock market made them penny stocks.
Porinju, hi, morning. You manage a lot of NRI and HNI money. How have the inquiries been from them currently, post the new government, the rise till 8,200 and now the correction of late?
Yes, Aisha, as usual, after the markets have gone up, media and everybody talks about the stock markets and the gains. More and more people are getting attracted to the stock market. That is always, it's like that. When the markets are under huge depression and values are very attractive, not many people turn up to buy stocks. NRIs, of course, especially I'm in Cochin and, we have a lot of Keralites abroad. They all earn decent money and their interest has turned to equities significantly in a higher manner compared to real estate and gold. And bank deposit, of course, is their main mode of investments. I think there's an increased flow into equities and there's a lot of queries coming in. And, as 25 lakhs is the minimum for portfolio management investment. Even a lot of middle class NRIs can afford it today. And there is very large number of queries coming in.
So what is it that you're advising them? There's still money to be made even if they get into the markets at the current level from now, say, next 2 to 5 years? Definitely,
yes. You cannot just casually buy stocks at this point of time after such a huge rise. You have to be very selective and it's a stock to case paradise even today. I'm a strong believer of that. I am seeing many potential multi-baggers and, when I look for values, I'm still more convinced that the values lying in the mid-cap and small-cap segment. And, now blue chips, that has been very considered to be the safe investments. See the kind of blue chips people invested in Hindustan Levers and ITCs of the world. They are not making much money if you see the last 1 year. Whereas most of the mid-caps, they might have gone 3-4 times on an average in the last 1 year. So there is a huge money yet to be made in spite of the big rise. And one thing investors have to bear in mind, there is a significant difference between a good company and a good stock. The best company may not be the best stock to buy. Now, I think Sun Pharma or say TCS, they are the best companies of India. But I don't believe they are the best stocks to buy today. If you really want to make serious money, look at companies in the mid-cap segment and in the small cap and identify the future blue chips. That makes money and the real fun in the game is, identifying the future blue chips.
We'll talk about those as well, Mr. Veliyath, but, typically bull markets tend to throw up fresh names. Should this bull market continue as you believe it will, what is the fresh investing theme that this market could throw up?
As a strategy in the portfolio management, I have been looking at some old generation companies, some old companies, and many of them are hugely asset rich and they were not in the fancy in the stock market for the last decade or so. There are such companies. Some of them are really turning around. Some of the, another challenge in those kind of companies were the perception about the management and the style of the management. That is also making a change in the recent past, especially with a new government, a stable government and a strong leader. I feel many of these managements are thinking differently. Some of them are changing in their attitude, and they are becoming more of, minority shareholder friendly. And these things can really create multi-baggers in that space. There are a lot of companies, and the change in the perception about the management is also happening.
Okay. So, Mr. Veliyath, now I want to talk about some of the names that you have invested in, that you are bullish on. Let me start off with the smallest one that I can see, Link Pens. Why do you like this? Most people have shifted to online and typing. I don't think too many people buy pens per se, right? I mean, why would you buy a Link Pen?
See, Link Pen is, we haven't bought it in the portfolio management. It was my personal investment. I think there was a name in the bulk deal. That's why it has been come to the limelight. See, this is a company which is highly focused on the foreign markets. India has, got a huge competitive advantage over China in making pen, and pen is definitely continue to be a very important, though it's a very small segment, it's an important item in the daily life, and that company was very, very, very attractively priced. The price used to be 30-40 rupees. When you say 30-40 rupees, this company was available at a value, what they have spent a few years back for the brand development. And a decent balance sheet, looks like a decent management. So I think that was a very small stock, and now the stock price is around 120-30. On a future cash flow basis, this company has got more potential to go up. But this is not any prime stock in our portfolio management. It's a small company.
So what is the prime stock then? I mean, okay, you have number of investments. There is a Harrison's Malayalam that I believe you have investment in, NIIT Limited, HSIL, Orient Cement, Force Motors. What is the one that stands out the most to your mind?
See, Force Motors, I'm very proud of identifying this company. I bought this company 4 months ago. Of course, this is a very well-known company. I found this was priced at around 500-600 crores of market capitalization. Bajaj, who are holding around 23% stake, they were exiting the company. So that was the trigger for me to look at the company. And see, they're the leaders in that particular market segment of automobiles. The last week was holidays. Whenever you go out to a tourist destination, you will be finding a lot of Force Motors vehicles, the travelers. They have, I think, over 60% market share in that important segment of the automobiles in India, which can grow much further. And their relationship with Benz and now BMW is coming up. A lot of triggers coming, and the biggest trigger, though it has nothing to do with the numbers, Bajaj exiting after many decades of partnership. I found, this is something could be acting as a trigger, and it is happening now. It has given something like 180% return since I picked 3 months back. And I feel sometimes, some negatives which are well known about the management, about the company or functioning, that makes, you get stocks at attractive valuation. Force Motors, people used to discourage me, don't buy the stock, no, the management is not good. They bought an aircraft for 150 crores last year. See, we cannot really judge with all those kind of 1 or 2 events. So I found that is not enough reason to ignore this company. When it is priced at 500-600 crores of market cap, a beautiful balance sheet. The balance sheet is, the reserves are more than 1,000 crores. And the company was available at half the price. So now it's working, and I think there is a long way to go. There could be some correction. Please don't buy the stock just because I'm talking about it.
Porinju, give us some more inspiring names as Force Motors, which you would still buy today, which the world may be against, but you have high conviction on. Yes.
NIIT Limited is a stock I have recently been acquiring in our portfolio management. I think it's a turnaround story, and this has been ignored in the last few years. Of course, it's a very big brand name. Management is very professional, and their US business in the corporate learning, that is really picking up. They have made huge investments in the past. All of that is going to bring results in the coming years. And I think they are holding the NIIT technology itself is a huge margin of safety. I feel the stock can be multi-bagger from these levels, and but it may take time. These are not for traders. Those who are ready to invest and hold on to that conviction, I feel there are a lot of such ideas in the market to make money.
But why do you believe NIIT could be a multi-bagger? I mean, it's a stock that's failed to perform over the last maybe 3 or 4 years at least, if not more. And the education space hasn't really gone bonkers. In fact, it's kind of died down. Why do you like NIIT so much?
Yeah, this was an underperformer. That is why I like the stock. Underperformed businesses are, for every business there is a price. This was underperforming because of the industry changes and structural changes in the industry all over the world. But that may not be enough reason to keep the price anywhere. Today it is, I think, around 700, 800 crores of market cap, clean balance sheet, great management. They have built a business model. They have made a lot of changes in the challenging times. And NIIT, it is going to make a big comeback when you look at the numbers. Maybe this year is at an inflection point. You will see, I think, numbers in the coming years to justify the prices. It hasn't moved much. It's around, I think, 50 to 53 kind of prices. The stock I like the stock at this price.
So how much could it gain? Currently the stock is at 53.40. Where do you think it could be, say, a year from now?
I normally don't give any targets for stocks. I'm very different. I like the idea and I like the business at around 800 crores. NIIT is an attractive price. The price next year depends on how they bring the numbers, how the corporate learning business in the US takes shape. They are making engagements with the major companies, global companies like Philips. So you can't limit the price, and you have to wait and see how it is converting into numbers.
Okay, very quick replies. We are running out of time completely, Mr. Veliyath. But two other names that I see. One of them is Orient Cement, and the other is Swelect Energy. We've heard about Orient Cement. Talk about Swelect Energy. What's the company like? Why do you like it?
They were sitting on a huge cash of around 550 crores last year. They still have the cash. And the company was available at 130 crores. And they are venturing into a very attractive, I believe, a futuristic business of solar energy. And the management has strong capabilities. They have a great team. And the company was available at 1/4 of the cash. And now it has come to around 400 rupees per share, which is like 400 crores of market cap. Still it is below the cash equivalent. And more importantly, it's a futuristic business, so it makes sense to make a bet. The stock price can go multi-bagger from these levels, depending on how the solar industry in India progress and how this company takes advantage. I have a lot of hope and confidence on the management and the business model of Select Energy. The other stock,
Orient Cement.
Orient Cement. See, Orient Cement and Orient Paper, it's a prime stocks in our portfolio management. The institutions were selling the stock a year ago. They made it a penny stocks. Actually, they were not penny businesses. And I remember I used to talk these companies stocks are penny, but the businesses are great. See, there are penny stocks in the market, but they are the market leaders in a country with 1.2 billion people. Please don't underestimate that. There are a lot of companies in this country. Orient Paper, I remember, this is the largest fan manufacturer in the world and fan exporter from India. And it's one of the biggest brands. This company's market cap came down to 80 crores when I was buying the stock 1.5 years ago. So 80 crores market cap. And this company spent 300 crores for capex in the last few years. And so these kind of valuations, and they might have gone up by 5 or 6 times, but that doesn't mean stock is overpriced. Now what's happening in the market, investors feel, okay, stock market have gone up too much, and many stocks have gone 5 times, 10 times, time to be cautious, and market will go down. I think it's too amateur to think that way. You have to see in the right perspective, look at the valuation of the companies. I feel there are hundreds of multi-baggers in India today. If you see next 2, 3, 4 years kind of a perspective, and the economic environment, the political situation, everything is, it is pointing towards the potential of creating huge wealth in equities in India.